Let's start with the big story today. NVIDIA has the NASDAQ futures up right now over 1%. Do you see this AI enthusiasm continuing throughout this market day?
Hi. Well, to be honest, I think it's very hard to fault NVIDIA's result. It shows that there's solid demand for these AI processors and infrastructure. So I think in the near term, this rally could continue. But I think ultimately it is a question of the valuations. So the risk reward at this point may not be as attractive as before, as the expectations may get incrementally harder to beat. But overall, this is a great theme, and I think it could continue to support the market.
All right. Well, I think they beat all expectations already, so we'll have to wait and see, Janet. Of course, today begins the Jackson Hole Symposium. Tomorrow, Jay Powell's speech. I'm looking at the CME FedWatch tool right now, a more than 85% chance of a pause, according to this metric. What are you expecting from Jay Powell tomorrow, and what impact do you think the anticipation of that speech will have on the markets today?
I do think that the Fed will pause. I think we're starting to see that impact from monetary policy, well, particularly from the PMIs yesterday, and also, well, inflation is headed into the right direction. I think they won't change the narrative very significantly. I think it's still erring on the hawkish side, given that there is still a bit of reacceleration of inflation, and the 2% is still not in sight yet. So I think they'll be cautious, but equally, I think they will acknowledge that inflation is heading into the right direction, and probably policy is really near the peak. So I think the question is, how long are they going to keep these rates elevated? Which I think it should be quite a while. I think at least until the first half of next year.
Right. We have heard the Fed say higher for longer. The market just doesn't seem to believe that just quite yet. I just want to ask you about risk. Is today a good day to add more risk to the table? Is this a time that you feel like you want to maybe put some money, or you advise clients to put some money in some riskier areas of the market?
Not yet, actually. We don't think this is the right environment. We think that, yes, there may be a pause in the Fed tightening cycle, but ultimately, I think we're starting to see that macro risk materializing. I think particularly in Europe, the PMIs are well in contraction in both manufacturing and services. And there's also this China risk emerging as well. I think so far the risk is pretty contained within Chinese assets, but I think if things deteriorate, I think it does affect sentiment. So I think the global markets may be affected as well. So I think it's not probably the right moment to add risk at this point, given especially the valuations is still a challenge. I think real yields, have surpassed 2% recently, and the valuation currently in U.S. market is not very consistent with that level of real yield.